Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is working. Hope everybody's having a fantastic morning so far. Hopefully your trading's been going well. We had an awesome trading day yesterday. We'll see if we can go ahead and continue that streak here. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. All right, guys, so I got a couple of trades on my mind right now. I actually just took a short on the pound yen just because it just barely came up or almost came up into that area. I think it was just a pip shy. So I said, okay, I'm going to go ahead and take the trade. So I'm shorting the pound yen right now. Yeah, right here. I just barely got into that. So there's several reasons for this trade opportunity. Also, by the way, the euro pound is a good trade setup. It didn't go to our area that I was hoping it would go to. I still think this has the short potential in it today, but it's not at a great area to short it at this moment. So the great areas to short the euro pound today would be, something like this, that zone, and then also this zone's not bad either. So, but if you're shorting below that, I would still prefer that than go long. But the problem is that it's just it's not good enough of an area to do so. I do like the area of the pound yen right now, just because this is a really good zone right here to sell at, and we're right there essentially. Now, why this pair? Why are we selling this, and why do I feel good about this pair? So a couple of reasons. First of all, let's just talk about the price action. Okay, so in terms of price action, if you scroll back in time a little bit, this is on a 5-minute chart. You can see we had this structure level, basically where our cells are at. So this is liquidity. And it's structured because this is what created, you had a support or resistance here, which became support there, support here, support, support. And then ultimately this little guy right here is what created this sell-off. Okay, he's the one that gave the permission to go ahead and break this beautiful structure level, and then it broke. So we know that this is liquidity right here, because this, whatever happened here, is what created this breakout. Okay, and so there's liquidity built up into this where we can get a good reward to risk ratio type of trade. Okay, so in terms of price action, this is actually a very good trade to take, and we can keep the stop losses typically pretty tight. We have a couple of options on the stop loss. You can either stop out as soon as it, like, let's say it goes back up, we could stop out pretty quick right here to protect capital. If that's, that's one option. The other thing too is, it's if you're willing to and you don't have a huge position built up, you could wait until this area right here. And when the market comes up into this liquidity, oops, right here, technically this would not be a bad area to go ahead and short. But keep in mind, from the area that we sold at, that's 40 pips away. So either you could just stop out and then re-enter if the market got back up to that, or you could, if your position's not too big, I like to do that kind of thing. So I could technically pull my stop losses up here and then just add a few more trades up in there. And that would be the next zone that I'd be willing to add more trades to. I might do that actually, just because I don't have a massive position. If you have a massive position, then you have to stop out at the most logical point to stop out. Like, you just have to do it, right? But so far so good, right? And this trade could be a monster trade. I'm going to look for a couple of areas. I'm looking here for a target, and I'm looking, let's see, here around, yeah, actually let's do here. And then I'm going to have just a couple of, greedy targets all the way down here. So I'm going to kind of scatter these in these general areas. So yeah, this trade could take a little bit, but these targets down here, right here, these ones could absolutely hit within the hour or this morning for sure. Definitely feeling good about those ones. But so in terms of price action, this is what looks really good, right? I have been watching this exact spot all morning, right? I've been waiting for this pound yen to come and tap into that. And it basically did it right at the top of the hour. It finally tapped in. And if you look at it on even a 1 minute chart, look how much time it spent up in that liquidity, right? Like 3 bars, 4 bars, maybe. It just, I mean, I've been watching and waiting for that exact spot all morning, and it finally just tapped into it very quickly. And now we're off to the races, right? We're already setting sail, just like yesterday on the Euro Pound. That one we'll talk and recap in just a moment. But this is fun. This is really exciting because this is real time. This is happening before our eyes. And it's an area that we've been talking about. I mean, you can go look at the Telegram for those of you that may have missed it. This is a trade that I sent out to you guys at 7:50 a.m. Mountain, which was just about an hour and 20 minutes ago. So here it is. Yeah, that's the area right there that I've been waiting for the market to tap into. And it actually went down first, kept going down, and then it came back up. And then, like I said, just at the top of this hour, it tapped into that zone. And then obviously we're off to the races. So it might be kind of hard for the market to tap into that zone again. We'll see. I mean, it could do anything it wants, right? Market really can do whatever it wants. But let's talk. Okay, so let me go back to that 5 minute chart. That is really fun to see. And we're already up 119, 120 pips on this trade, and it was just taken a few moments ago, right? Okay, so again, why there are tons of different liquidity zones. In fact, this morning, I was looking at, technically this is a liquidity zone right here. This is another liquidity zone. This is another one, right? There's tons of liquidity zones. Now, why is this one in particular so exciting? Again, it always comes down to which is the one that broke structure, right? And a major point of structure. It's this one, right? You could argue that this one also did really well. So that's why I'm saying if the market did go back up today, I would feel pretty confident, to be honest, selling right in here, if the market wanted to go all the way up there. This one, not as confident, right? I mean, you could argue that there was a little bit of a structure point, maybe like right here. You could argue that, right? And sure enough, yeah, the market, I guess, recently came pretty close to this liquidity right here. It pulled back a little, but not a ton, right? And I think it's because it's just not the most significant point of structure, this one. Whereas versus this guy right here is totally it's the liquidity zone that gave permission for the market to break out. And that would require a significant amount of orders from the big banks and whoever to create such a break. And so now that the market has returned back to that area, no wonder why the market's reversed so quickly in the last 10 minutes from that point. It just went there and got rejected immediately. So it's basically doing exactly what we thought it would do so far, right? And now I'm just, now that I have really in my opinion, a pristine entry, I'm in a really good spot. We're in a really good spot where we can just hold this and let these ride to some of these targets. Okay, so in terms of price action, I think we pretty well covered this. And then obviously the other thing that you guys know that I've been doing recently is looking at sentiment, right? So if you look this morning on the pound yen, there's been a pretty drastic change in sentiment in the last 24 hours by the retail traders, so the average trader. So the average trader has increased their positions by 40% on the pound yen to the long side, and they've subsequently decreased their positions by 24% on the short side. And this is the most drastic increase by all the different currency pairs that Daily FX monitors. And they look at, like, I think it's 12 to 14 pairs here, and there's also indices that you can look at too. And there's also oil and gold that they also monitor. So, you have those two that you can look at, but I think there's 12 to 14 actual currency pairs, and there's 28 different currency pairs that we trade. I trade all the majors, and I think they're called second tier exotics that I trade. I just don't trade things like the third tier exotics, like the Russian ruble. I don't trade Mexican peso. Argentine, Argentina. I don't trade anything that's not in the G7 essentially. Okay. So, and these guys don't even have all of those. They just have the top 13, top 12 currency pairs in terms of liquidity. But in terms of all of those top 12 to 14 currency pairs that they monitor, the pound yen had the most significant change in the last 24 hours, right? A 40% increase in long positions and a decrease in short positions by 24%. It's pretty drastic move, in such a way that it actually tilted the scale over here. You can see the net long is now 53%, net short is 47%. So naturally, I'm looking for short positions, because if the retail trader is buying this and flip-flopping so quickly, I shared that example with you guys. My first mentor actually shared this, and I love this example. He talked about, if you take a cookie sheet, I actually baked cookies yesterday, and I thought about this again. If you take a cookie sheet and you're going to clean it and you're going to fill it up with water, if you ever so slightly tilt that cookie sheet one way, all that water is going to flood that one direction. And then if you tilt it the other way, it's going to tilt quickly. And the financial markets work the same way. You ever so slightly tilt the market one way, it seems like everybody piles in that way, and they get rid of their water or their funds in that other direction, and they apply those funds to the new direction. And that's exactly what happened with the pound yen. Over the last 24 hours, we flooded to the long side, and not only did we flood to the long side, but we sucked out the liquidity on the short side from the retail traders. So if you're a big bank, a market maker, I think your direction this morning would be to look for sell opportunities on the pound yen. And so if the market hits a major liquidity point like this, what's likely to happen? A quick pullback, right? Very quick pullback. And that's exactly what we've seen. So that's why I'm looking for sell opportunities here on the pound yen. And then on the euro pound, actually, take a look at this. Look at the euro pound. It's basically the same thing, guys, but not to the same level or extremeness, right? On the euro pound, we've got a 26% shift to the long side and a -5% shift to the short side. So same concept, that baking sheet, that cookie sheet has tilted to the long side, and everyone's sucked money out of the short side and thrown it to the left side of the cookie sheet where the longs are, and that's where the money's gone this morning in terms of average traders, right? So, and again, banks I want you guys to remember this. If you or me or we're the retail traders and we buy something, what creates a market? If I buy and you buy, somebody else has to be willing to take our sell, right? If you and I were to go to a marketplace, anywhere, you go buy a gallon of milk, you go ahead and buy that. Somebody is willing to sell it to you at a certain price, right? And if you're willing to buy at that price and they're willing to sell at that price, that's a market, okay? It's a beautiful thing, okay? That's a market. And markets are in everything. They're in real estate, they're in currencies, they're in stocks, they're price of eggs, price of milk, everything's a market, right? and it's a beautiful thing. Now, the only way a market can happen is if there's a willing buyer and a willing seller, right? And so if the retail trader is a willing buyer at a certain price, somebody has to take the opposite trade. And so, the market makers don't want to lose money. They're here to take dumb money. So naturally, they're going to find ways to take the retail traders' money. Where is the big bank? Where are the big banks going to do that? They're going to do it at these natural liquidity zones, right? So this pound yen is a prime example of that. This is a great area where the banks would be willing to do something like that. Okay. And this is something that I really am pretty passionate about. And I think it's important to remember. I don't want you guys ever to just go to this sentiment index or any of the sentiment indexes out there, because there's dozens of these. Okay. I don't want you to go to an index like this and then just simply take a position because most people are long or most people are short, and then just simply take the position. I don't want you to trade that way. I used to do this that way, and it's very hit and miss. Some days you're going to make a killing, and other days you're going to be dead wrong if you trade sentiment that way. Okay. And I don't think it's a bad thing to use. That's why I use it. I think it's a good tool. I think you just kind of have to know how to apply it. So I'm using this to find out where the liquidity is shifted. So I use this tool, and there's Awanda's. Awanda has one. Who else has got one? Duca's copy, my FX book, Forex Factory. So many people have their own sentiment index, right? So tons of them out there, and they all are basically going to tell you about the same thing. But you just don't want to just go in there and take a trade because somebody's long or somebody's short. You're trying to track where the liquidity is, where the liquidity is moved in the last day by the retail trader. And then your job is to go and apply that and look for liquidity zones, areas of interest where you might be able to get a really good trade opportunity, right? That's how I want you to use it. All right. And then the other trade that I'm looking at is this euro pound, right? And this is a trade. Well, so here's the liquidity zone I was really interested in, right? On the euro pound, it hasn't gotten up to there for us, but definitely looking for a short kind of in this area. And here, let me show you why. Basically right here is where whatever happened here, whatever orders were applied in this area is what caused the market to break this support level, right? And so that's liquidity that's sitting up there. So if the market returned back to that, I'd like to sell that, especially because most people, most retail traders are buying this today. And since they're buying, we want to sell, but we just don't want to sell anywhere, right? We want to sell where liquidity is, right? So liquidity is there. Another area where liquidity is at would be, again, I talked about this area right here. There's a little bit of liquidity there. It's not the greatest, but yeah, there's liquidity there. So that's another good selling area, but the ideal selling area would be right here. So, okay, let's see what else, guys. Oh yeah, I wanted to, and actually you can see on here, this was a great area. We actually talked about this yesterday, that this was a straightaway. This is a straightaway area. So the market should move pretty quickly through the straightaway, and it did. I mean, actually, it's kind of stayed in here for a little bit, but ultimately broke down, right? So, okay, this is the trade from yesterday, right? You guys remember this? We also shorted the euro pound yesterday. We shorted kind of through here. We were using this little liquidity area as a short, and it worked out. Like market came up and then pulled back, and this is where I made most of the money. And then this area is the area that we talked about all morning, right up here. You can see this market came right up into this liquidity. And again, it's whatever happened here is what created technically this break of structure right here, right? That's the real, whatever they did here is what kind of led to this breakout of whatever they created through this area. You could argue that some of it was here, but I think the real liquidity was tapped in or built in right there. And so we took a short right there. And you can go back and check this out. We took this trade right here. So here it is on the Telegram group chat. That's the liquidity zone I was talking about, right? Market came down, came up a few times, came down, came up, and then ultimately tapped into that right there. I think an hour or two after the it came back up into this, an hour or two after the bankers close webinar, tapped into that and then pulled back for the rest of the day. And that was a great trade right there. Now, I wish, obviously, can you imagine being able to stay in that trade, selling right there and being in this trade still? Oh my gosh, huge money. I just didn't know it was going to go that far. I didn't know it was going to be that great. But here's another illustration I want to make, guys. Here's another illustration. Okay, this is something I've been really trying to kind of like emphasize because I think it helps you understand how the markets work and how you have to trade in order to be very profitable, okay, and take the very best trades out there. One of the things I mentioned yesterday that I think is so important is a lot of retail traders are willing to buy and sell at just any price. They're willing to buy and sell anywhere. So where is the price most of the time? Where would you, if you're just looking at this chart, where's the average price? Probably like, I don't know, like right here. Maybe that's the average price of, here's the ups, here's the downs. Average, the market is just like right here. And that's where most retail traders are buying and selling. They're just buying at the average price, right? So how much opportunity do you have to be profitable during this, what is this, 6-hour period right here? How much opportunity, I mean, you could buy or sell. Maybe there's an opportunity to buy right here and close out there if you're lucky. If you sold here at the average price, maybe there's an opportunity to sell here if you're lucky. Maybe you close out here and get a few pips or something like that, right? If you're just the average trader and willing to take whatever price is available, you're not going to get the best reward to risk ratio. And what's going to happen is when you lose, that loss is going to be really, really big. And when you win, it's not going to feel like enough profits, right? It's just, maybe you'll win a little bit and be lucky, or maybe you'll get a big win and be lucky, but it's not going to be all the time. The real winners are going to be when you're patient and willing to wait for these types of areas up here so that you can get those really good reward to risk ratio trades. But here's the key point. Out of this entire 6-hour morning period yesterday, right, / afternoon, how much time did the market spend in that ideal area? Okay, this is just going to really make you think, right? It makes you think about how you have to trade to be profitable, right? It only spent, these are 3-minute candlesticks. I'm on a 3-minute chart. So every candlestick over here is, you've got 3 minutes there. How many candlesticks did the market actually spend in that zone? 1, 2, 3. So that's 9 minutes. Out of 6 hours of trading, the market spent 9 minutes in that ideal area. That means the bus came and the bus went. It just didn't stick around, right? And I guess that's really the main point I'm trying to really hit at is you have two options. You can either sit at your computer and just wait and wait and wait and fish and fish and fish for 6 hours straight until the market actually hits that. Or you can place a pending order there and wait for the market to hit that and then go ahead and just execute on the pending order. The other option is you could put an alert there and then just have that alert, text you when that opportunity shows up. My only problem with alerts, guys, is that if the opportunity is only there for 9 minutes and you're running an errand and that alert pops up and you're driving your car, you can't take that trade. unless you pull over and quickly pull up your phone and make sure you don't misdial or add an extra zero on your lot size, which happens, right? It happens to the best of us, or, don't misprint your stop loss or whatever. You could do that. But it's a little bit more risky, I'd say, to put an alert in. Or maybe, I don't know, you're cooking food and you can't, whatever it is, you're running errands, I don't care what it is, life happens. It's going to be really hard to just be there when that happens. That's why I'm a huge proponent of pending orders. So you can actually place the order now in that area that is a great area. Place your stop loss now, place your target now. If it hits and you trigger and you make money, wonderful. You're going to make a good amount of money on those types of trades. When you lose, you're going to lose. And hopefully we can mitigate those losses as much as possible and keep those losses small. I think this trade alone was like a 3-to-1 or 4-to-1, even without all of this profit from today. Obviously, this has come down quite a bit today alone. So had we stayed in that sell, we would have been really even more profitable. But I think we still made 3-to-1 or 4-to-1 on this trade, even without all this profit. But yeah, that's kind of the concept that I'm trying to really hone in at, is that these opportunities, they are there, but everyone else in the world, think about this, guys. This is a multi-trillion-dollar daily market. There are $6 or $7 trillion that push through the Forex market every day. Okay. Put that in perspective, and which is awesome because there's so much liquidity, but there are millions and millions of people and banks around this, not just this country in the United States, but around the world. It's a global market, and they're all in fierce competition against each other, and they know where liquidity's at. They know where these things are, and a lot of places have way better tools than we have. Now, we don't necessarily need all those tools if you know how to read liquidity and know how to read supply demand, and then just exercise proper risk management. I think you can trade really well doing that. Which, by the way, side note on Forex robots, I've had a lot of people ask me about Forex robots. There are some out there that might be profitable, but I've been trading for 10 years, guys, and I haven't been able to find a Forex robot that can stand the test of time. Like, I've seen people come in with robots that make money for 6 months or a year, and then a Brexit event type happens, or a flash crash comes into play or something like that, and their strategy is trash and that robot is terrible and they lose their clients millions of dollars, right? So anyway, what I'm saying is traditional trading, where you come in and spot these supply and demand zones, still is king, right? Like, robots have not taken over yet. I know they're really enticing. They got the AI robots and things like that, and they're really enticing. And yeah, there's some use for that. Like, I'm not saying that it's not gonna work. I would just want to save you some time on certain robots. If you're going to go down the robot route and have a robot trade for you, let me just share one piece of advice, because I've built my own robots. I've actually had people in Morocco build robots for me. And anyway, let me just tell you, from my 10 years trading and going through robots here and there, the robots that are the worst kind, so stay away from these ones if you're going to go down robots, are the ones that use martingale. Okay. So martingale is basically where you add to losing trades. Okay. So if a trade goes against you, I had one robot that worked for a long time, where basically it would just take these small profits. It would take profit after profit after profit, and the equity curve was just up and up and up and up and up. Meanwhile, you might have a trade or two that's down quite a bit, and then what the market would do is it would never close a losing trade. It would just wait for the market to come back, and then when it came back to a certain threshold, it would add another trade in hopes of when the market gets back to break even on that setup. So let me give you an example. Let's say you're down $100 on one trade, and the market starts to come back in your favor. It will execute another buy, and then it would close out once that buys up $50 and the other one's down 50. So you would break even on that opportunity. Okay, and that's how it would close out losing trades. And it worked for a long time. And I was really excited about it because I went months and months and months with no losses, basically. I mean, the losses that I had, it had a break-even method of closing out those losing trades. But the problem is it was something crazy changes in the market, your equity goes down so significantly, and you're carrying these bad trades that ultimately you can't maintenance with your margin, that the strategy just falls apart at some point. So anyway, anything using martingale where you're adding to losing trades and it doesn't have a defined stop loss mechanism, in my opinion, are terrible robots. So just stay away from those kinds of things if somebody offers you a martingale robot. All right, guys. So I'm just, yeah, so far so good. We're just waiting on this trade. We got a really good entry. Still up 100, almost 100 pips on this trade. I don't know exactly when it's gonna take its hit to the downside, its big hit to the downside. But my goal today with you guys on this pound yen would be to get it back down to this area, to this little demand area down here would be ideal. And those trades, those two would make about 50 pips a piece. And then we'll just leave these other ones to ride a little bit. If this market goes back up, I won't add any more trades, I don't think, into this liquidity zone because I've already got trades in that liquidity zone. But if it comes up to here, I probably will add a couple of trades in there, but I think that would be it for me if it came all the way up to there. I doubt it would at this point, at this time of the day, but anything's on the table, of course. All right, and then yeah, just euro pound, same thing. I'm just watching this one. I actually do have a couple of trades on here too on another account, but it's just yeah, I'm just waiting for the market to either come back up into here or come up into here, and those would be really good selling areas for me. So we're being patient to say, basically what I'm trying to help you and I do better is I want to make sure that we're buying and selling at levels that make sense. I don't want to just take whatever price is available, right? Yeah, if we just take whatever price is available, we're going to be like the average trader, and we don't want to be like that. So yeah, up here or up here would be my selling areas on the euro pound. And then we've already sold at a great area on this pound yen. Fantastic area. If you look at it from a 1 minute standpoint, how much time did the market spend up there? 1, 2, 3, 4, 5, maybe 6 minutes total, and really 2 minutes of perfect execution, right? And this trade has been on for about a little over 30 minutes now. So the ideal execution has long come and go, but we can have a lot of comfort in this trade. Hey, one quick thing I just noticed that looks kind of cool. I don't know if this is going to play out, but I just noticed that this kind of looks like a head and shoulders pattern. So hopefully we'll see if that can finally break down, right? I mean, it kind of looks like it's gearing up to. I think the next major layer is this right here. If it can break through that, this layer of support, I think it could really break down from there. We'll see what happens though. All right. Yeah, and this euro pound, oh, this is what I want to see. Oh, this is what I was going to say. It still looks incredibly bearish to me. From the higher time frame, we didn't talk about this that much because we talked about it yesterday, but again, this is still in force that we talked about, this head and shoulders pattern. This is still kind of what's driving the market down. And there is some liquidity right in here. Let me show you. There is some right there. So I do think it'll come and tap into that again, but my eyes are kind of set. I think this euro pound wants to come into here. That's what I think is going to happen. Plus, this is the liquidity right here that technically broke this structure point over here, right? Yeah, this and this. So that's where I think the market really wants to go, because that's where liquidity is at. So, and that's 40 pips away. So I do think that that's on the table. Not this morning. That's not going to happen this morning for sure. But it's on the table over the next couple of days. So I think looking for sell opportunities on the euro pound makes sense for the next couple of days. You know, go ahead and continue to look for more sells. And the euro yen, I haven't done a ton of higher time frame analysis other than the 5 and 15-minute chart. I just see a really good opportunity for today, right? Today looks good. Again, most retail traders are buying this right now. So I'm just basically looking for the market to break down at those liquidity points. And obviously we're still positive on it, but if it does break up, in fact, I think I'm going to bring this up just a little bit, these stops, because I am going to look to really kind of go heavier right through this area right here. That's kind of my area. So I'm going to go ahead and place some sell limits just now. I'm going to go ahead and have these ready to go up here. Something like that is what I'd be looking for. And then I'm just going to pull these targets down to this target right here. We'll see if it can do it. I think it's gonna find out it's gonna be a struggle, especially considering how quickly this market came up and quickly got pulled back. I feel like this market's gonna finally be like, whoa, that was hard. Yeah, it's gonna be really hard to break through that. And for those of you that are wondering, we will have COT report tonight. COT report webinar that'll be at 7 p.m. Mountain or 9 p.m. Eastern. It's kind of a weird week with the COT report. There was an error. I don't know if you, for some of you that trade it, I know you guys texted or emailed me about the error. The what's it called? CFTC.gov website. Of course, it's government, right? Government website has problems. Shocker, right? Anyway, CFTC.gov website's having a problem. They claim it was a third-party issue, though. I don't know what third party it is. They're just claiming that it's a third-party issue. So they weren't able to get us the report in time to begin the week. So anyway, so it's been kind of a weird week with the COT report. just because we haven't been able to be on routine. And also part of it was because I started putting it together Sunday afternoon when I was coming home from Florida, but I couldn't. In fact, it was funny. I actually put it together. I put in all the data, and then I realized it was the same data from last week, and I was like, why is this the same from last week? And I realized it was the same from last week because they hadn't updated it yet. So anyway, hopefully they get it updated ASAP. Actually, I think they've already done it, but I need to go in there and do it. It's just been a weird week. I haven't really been trading the COT report in the traditional sense this week just because it's been, my whole routine was thrown off by it. On occasion, they do updates. One time, you guys know I have an Excel macro. I had a client who made a macro, an Excel macro, so that it actually just pulls that data into the Excel spreadsheet every week. So I just click a button that says update, and boom, all that data gets hauled into my Excel spreadsheet. But on occasion, they make updates and we have to update the Excel macro because they change how things are administered or displayed. And so, you know, it makes things a little bit difficult. But it's fine. Most of the time, it's fine. It's just this week was kind of weird. Another side note, kind of what we were talking about earlier, imagine how frustrating this trade would be had we just taken whatever price was available, right? Like we just, let's say we sold here or sold here or sold here. We'd be very frustrated to be back and forth, back and forth. And it has been a little back and forth, to be honest. But the thing is, it hasn't even gotten back to where we sold at, right? It's because we sold at such a significant area, such an area of such supply that the markets struggle to even get back to it. Now it does kind of look like it wants to try to get there again. I'm not sure what its deal is right now, but it kind of looks like it wants to try to make another move to the upside. We'll see. Definitely feel the pressure of the sellers and the buyers right now. All I know is we have a really good area. We sold at a really, really good area. So if this market wanted to break up, again, this is another really good area. Could we sell in between that? Sure, you could sell in between, but again, I don't want to be like the retail trader and just sell at any price because it's available. I want to sell at very strategic zones. But yeah, we'll see what this does here. It needs to break. We talked about this. It needs to break this right here. If it breaks that, we could be on for a good ride. It really could just kind of fall away, which would be perfect. Okay, and let me see how the euro pound's doing. Oh, great. It is coming back up a little. Let's look at it from this standpoint. You know, I'll be honest, I'm not as interested in this liquidity zone as much. I really like this one right here, the one that's above. And really it's actually just this, right? Why do I like that? Well, it's because if you think about it, this liquidity has already been mitigated. And what does that mean by mitigated? Since the market has already come up here into this liquidity right here, and it's pulled back, that means it's been mitigated. It's already been tapped into, okay? So the likelihood of a liquidity zone to continue to work after it's already been tapped into diminishes, okay? So let me give you examples. So in fact, you can look at the pound yen. That one hadn't been tapped into yet. We didn't tap into this morning. That was the first time we were the first people to that liquidity zone. And that's why it's worked out so far, right? Now, if the market were to come back up into that, I wouldn't be as interested in continuing to sell at that zone because it's already been mitigated, right? So if you're a bank and and let's say you had long positions and you wanted to take profits on those and then you wanted to switch directions and start selling, this would be the ideal area to do that, right? Okay. Um, this area up here where I'm looking to sell later, if it comes up to it, is a great area to sell because it hasn't been mitigated, right? It's already been up to it, right? So that's why, I'm looking forward, if the market can come up to here, I'm looking forward to some sells up there. But I'm gonna try to find a liquidity that didn't work out, or it worked out and then tried to go into it again and then failed. Okay, well, here's a slight example. I can just see one on this chart. So back here, this was a demand zone right here, and you can drag this out all the way over to here, and you can see that the first time the market tapped into this, it tapped in and then popped up just slightly, right? And then it tried coming in a few times and it just kind of floundered, and then it actually broke. It kind of, typically if liquidity is going to work, it's just going to go. If it's going to hit it, and it wants to reverse, it's just going to go the other way. This one, kind of, not really though. Kind of came in, tapped into liquidity, and then came up, and then just kind of floundered. And hopefully you either have a tight enough stop loss and or um and or you recognize that in time and then you just get out. So if you don't recognize it, hopefully your stop loss is tight enough that you don't take a huge loss, right? Okay, and then let's see what I was going to say about this. So that's a liquidity that failed because it had already been mitigated and it tried again and it just failed at that point. So I don't like to use areas that have already been touched. I like to be the first person to it. Trying to find some more examples for you guys. Trying to find one that touched multiple times and failed. And that's the thing. Sometimes they can touch multiple times and still work out. I just don't like to do that. I like to be the first guy to it. At some point, we're going to get a breakout, guys. We just don't know which way it's going to be. Is it going to try to go back up or is it going to try to break down? We just don't know. We don't know which one it wants. I have a feeling because it is hanging out up here. I mean, I could be wrong, and I'm trying to play conservative, I guess. I mean, obviously, I'd love for this to just break down. I think all of us would agree. But I try to plan for the worst, right? So, and I guess my argument is because it hasn't just broken down quickly, makes me think that it wants to try to go up again, that it wants to try higher, which is fine. It's just that I'd love for it to break down now. And then I'd have to wait until it got up to here, and then you should get a huge pullback. You could go there and then just pull right back. Ideally, it just comes down and hits these targets today, and we close out in the next 1 or 2 hours. Well, I really don't have much more else to update you guys on other than just that's the plan with the euro pound or the pound yen. And then euro pound is, I'm looking mostly for shorts here. But I really don't want to short anymore unless it comes up into either this again and ideally comes up into this. Basically this right here is really what I want. So that's what I'm going to do, guys. I'm going to go ahead and wrap up here. I'm going to go ahead and put in, like I said, just leave this trade alone. Let it do its thing. I would quick little guidance or guide point tip, whatever you want to call it. If you're going to put in a big lot size now, if you have a big lot size in now, I would recommend stopping out here, just above this liquidity, because you have too big of a lot size to have. I mean, it's not necessarily too big. It's just, you don't want to take on a huge loss. So you might want to cut that right there. And then maybe try a re-entry here and stop out up here and do that again. So you could have two different entries, maybe lose on this first one, and then you'll make money on the second go around. You could do that, or you could do the second approach, and that's where you hold on to this trade if it does go back up and you look to sell again up here, and you just basically wait for the market to pull back from that area, and you'll make money on both sides. You'll make money on these. Most of your money will be made on this, and you'll make some money on this trade. But ultimately, its fate is to the downside. That's its ultimate fate here, is either come down now or come up to here and then come down. That's its ultimate fate, in my opinion, from what we've observed today, from all the different angles that we've observed it. But so I'm just letting you know how I would go about this. Again, if you have a big lot size, stop out here, re-enter here with again, a sizable lot size, stop out, where my stops are on everything, or take a smaller lot size now, make a smaller profit if it comes down now. But if it comes back up to here, you're drawn down, you're losing money on these guys, but with the hopes that these guys come in to rescue the trade and then you make money this way. But if all of that fails, if everything fails, then it would just go out to these stop losses now, and that would stink. Okay, but that is the reality too. So just keep in mind that that is possible, and you guys have to decide what your lot size looks like if you're going to go one of those two routes. So all right, guys. Well, I'm going to go ahead and wrap up with that. Really appreciate your attendance today. Thank you for coming. For those of you coming to Caught Report, we'll see you guys tonight. Otherwise, we'll see you tomorrow in the next Bankers Close webinars. Thanks for coming, guys.